Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we'll be talking about a rural focused stock which has become very attractive post the recent correction. Please watch this video to know more. Now the company in question is Godrej Agrovet Limited, which is available at Rs 532.10 and the face value for it is 10. Now Godrej Agrovet is a diversified farm to fork company with interests in animal feed, oil palm plantations, agri inputs, poultry, dairy and frozen food segment. Majority of its business accrues from the underpenetrated and high growth segments. Now the company launched its initial public offering in October last year and the stock has been a decent performer since then. It has generated consistent returns and achieved high growth through both organic and inorganic routes over the years. Now the company has also been able to curb degrowth in the animal feed segment, which contributes almost 50% of its business and had seen some hiccups in the past quarters. With growing exports and improved domestic performance owing to new product launches, there is an expectation for the company to deliver decent growth in the crop protection segment. Though some impact of the rising raw material prices due to Chinese supply constraints is expected, the same might be countered with higher margin product launches. The palm oil segment has been a strong performer for the company. There is an expectation that the segment will be a growth driver with favorable policy support. Higher import duty on oil is helping improve domestic prices of palm oil, leading to improved realization and margins. Now the dairy segment has faced challenges on account of adverse milk and low butter prices during the quarter gone by. The company has now launched products in the value-added product portfolio which would usher better margins in the coming quarters. The expansion in the frozen food segment with new product launches also stands to aid margins. Besides, the company's balance sheet remains healthy with low debt, adequate cash and room for inorganic expansion. Post-correction, the stock is now trading at FY19 estimated EV/EBITDA of 20 times, which looks very attractive. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.